This is Alan Bush with the Daily Financial Forecast for Tuesday, March 29th. Starting out with the stock index futures, we did see some pressure in the overnight trade. This linked to comments from a Fed bank president indicating that the Fed is on track to raise interest rates at a gradual pace. Also, some of the pressure linked to lower crude oil prices. We did have some better than expected, however, economic reports coming out at 9 o'clock, so that's bringing this market off of the lows. Also, being on the floor a little bit earlier today, traders are talking about Janet Yellen's comments that are scheduled for 11:20 Central Time. And she'll be speaking before the Economics Club of New York. So if you recall, it was just at the last Fed meeting that the FOMC told us that they were expecting only 2 rate increases this year, which compares to the 4 rate hikes that they were talking about at the December meeting. So we are seeing a tendency for Fed speakers to talk back, or at least take back, some of the dovishness that we have heard from earlier comments from the Fed. So it would not be surprising to see Yellen's comments to be a little bit hawkish on balance. I think that might be one reason why these stock index futures are a little bit lower today. Longer term, we do feel that the main trend is higher for the indices as global interest rates still remain very low. Now, moving over to the currencies, seeing the dollar index a little bit lower. Did have a bit of a bounce over the last 5 or 6 days off of the lows, but some profit taking coming in over the last day or two. Longer term, we do feel that the dollar index will probably work higher as the Fed is still the only major central bank that is likely to raise interest rates this year. The Bank of England may be raising rates sometime late in 2017. Other major central banks are accommodative, such as the Bank of Japan and the European Central Bank. So the dollar index is still likely to be the best performer of all of the major currencies. Also, one thing I think is rather interesting, the Canadian dollar and the Australian dollar holding up very well, even though we have crude oil prices lower. In fact, the crude was as much as $1.20 lower, but the commodity currencies, the Canadian and Australian, holding up very well. And I'm wondering if this is an indication possibly that we may be close to a bottom in the crude oil market. Now, moving over to the interest rate futures markets, a little strength in the overnight trade, some of this linked to lower crude oil prices and weaker stock indices. Also, we do believe that the Fed is still only going to raise rates 1 time this year, even though the Fed said that they will be raising twice. Also, as far as the probability of a rate increase at the June meeting, it's dropping down to about 37%. That's a little bit lower than what we had yesterday. And the probability of a rate increase at the December meeting at 67%. That's a little bit lower from where we were yesterday. Also, the fundamentals seem to be a bit offsetting in the interest rate futures markets, but I would continue to center on the long side of stock indices on weakness, the long side of the dollar index, and also the bearish side of the British pound. So, good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.